Welcome to Those Odd Numbers podcast. My name is Jason Snider. I'm the founder and CEO of Main Street Financial Group. We are your fractional finance team.
I'm Summer McFarlen. I'm a CPA and certified tax coach. I'm also the co-owner of Main Street Tax Group, where we do strategic tax planning so you can keep more of what you earn.
I am Masheka Turner, and I am the owner of Bright Skies Business Services. We are your outsourced accounting firm and profit first strategies. And we are here to help you create wealth through your business by gaining clarity around your numbers.
Hello, and welcome to another episode of Those Odd Numbers. My name is Jason Snider, and I'm the owner of Main Street Financial. And I have here Masheka Turner and Summer McFarlen. And today, we're going to talk about cash forecasting and profit first and how the two can interact. They're not exclusive. They can work together, even though some accounting professionals may have given you different feedback on that. I know this was in our pre-recording discussion earlier, we've all had different experiences with our clients and their expectations around that. Masheka, do you want to start out with, in your particular niches and customers yourself, how do you work with forecasting needs and requests in Profit First?
So the first thing that I do when we are using Profit First and forecasting is, I hate to keep saying this, but I'm going to say it, bookkeeping. So the bookkeeping is the map, so to speak. I know it. I always say that. Nobody wants to pay for bookkeeping, but you can't have the magic of what the numbers do without the bookkeeping. So first thing we do is we start with making sure the books are in order and what are those numbers telling us. I get it. Nobody wants to do this. I get it. But if the books are done correctly, those numbers on the profit and loss and the balance sheet tell a story of what's happening. And so just for reference, I work with med spa owners and weight loss clinics. So usually the first place we start is making sure that those costs are lined up the way they need to be. Because if the costs are lined up the way they need to be, that already tells us what our gross profit is. So for every dollar I make, whatever percentage is going to the products, because you can't do the service in our line of work without the product. So we figure out, what is that number? Is it 25%? Is it 30%? Whatever you're doing. And so usually what I do is, if we figure out that number is 30%, then we're going to start 32%. Take that off the top and then work with what's left. So that's usually a quick and dirty way we get into it. We can talk more about some other things we do to go deeper, but if you don't do nothing else, that's a quick and dirty.
Take 32% for your specific industry, off the top of their revenue and put it into an inventory account so you can buy more inventory to have more sales.
That's it. So let me caveat that. If we look at the bookkeeping and figured out their cost is 30%, we usually say, let's do 32%.
A little buffer.
And we're going to live off the rest of that. But you got to have things in order to be able to see that, because a lot of people, I don't even know how we come up to this, but I'm just going to put it out there. Your bank statements only tell you what's coming through. Bank statements are not going to be able to give you granular information about what is spent in each category. So that's one message I want to get out there if I don't do anything else. Because a lot of people want to do profit first with just bank balances. And that's cool, but there's more to be said than just bank balance. I'll let you take it over.
The other one is probably, and this would probably be another episode, the ones who want to run it on their Excel spreadsheet.
The Excel is only good as the person putting the information in.
In being honest, as a business owner myself, isn't going to happen. It's going to be the last thing that's going to get done. And I would say with most of our clients as well, be busy doing their work all the time and delivering, running, managing the business. It always ends up being the last thing. And I'm sure Summer has experienced this in the tax. Part of it is that it ends up being compressed into the deadlines because they wait till the last minute. Before they're working with us, we tend to onboard a few clients where they've tried to do it all and they're just so frustrated and stressed out that they still have that same mindset of waiting the last minute. It doesn't get done, and then we have to do catch-up work to get them in a position to do it. So bookkeeping is the foundation. It's not fun. It's not exciting. There's no magical formula that we can talk about on LinkedIn to get a bunch of likes and views on it. It's just fundamental things. It's like cost reduction. You grind away at it on a week to week basis. It's not something that you cut 30% in 1 month and then off you go. It's a daily habit, a weekly habit.
Yeah, I'm in the last 2 weeks proceed right now as we're recording this. I've got 2 weeks to go, right, until April 15th. And I would say I'm probably, I've got some Excel trauma right now that I'm having to deal with.
Excel
Thank
PTSD.
God for sort. That's all I can say. And I just go, if you could just spend the $35 a month on a zero account or something like that, you would make my life easier. Probably their life too, right?
Absolutely.
Yeah, you definitely, But good bookkeeping is foundational. And I can tell you as a business owner, if you're not an accountant, if you're in some other industry, you're doing your own bookkeeping, you're probably not doing it right. We run into a lot of that too, where we have to fix books.
And as far as our method of cash forecasting ends up usually being the 13-week cash forecasting format.
That's a good way to start, I think, is putting a 13-week together, rolling. Go more into that.
I'll give a couple pointers around it that we've experienced. Client responses is they're trying to recreate their P&L, meaning we give them the template, we don't actively manage it for them or do it for them. We set it up, show them how to do it, and then they're maintaining it because they have access to the information that we don't. We're usually referencing QuickBooks or Xero, which is historical, and we have some forecasting that as far as guidelines to help them put that together, but they're maintaining it because they're closer to that information, and it would cost pretty high expense for them to hire us to basically be like a 10 or 20 hour a week employee to manage in some cases these. So we teach them. And so one of the feedback we get is, or I run into, is they're trying to replicate perfectly their P&L. Which we're not trying to do that. All we're trying to do is forecast out week by week what the cash picture is going to be so that it can guide decisions that are coming up around. So it's not replicative of historical, which is the P&L. It's looking forward what we're anticipating based on then that ends up something we have to teach of mindset. You're not trying to recreate your P&L, even though it looks similar. We're looking forward to identify potential cash deficits, and then you, the business owner, need to respond to that. And so the other one that we run into is a black and white of responses. They see a deficit coming out, and then they're panicking, they're freaking out 10 weeks out. And that's actually quite common because many times, especially if the revenue picture is consumer focused or some other things where there's not a lot of visibility looking forward. So if you don't have a long sales cycle or you're invoicing out for future, you're going to not have that full picture. It's within that 8 weeks, that's when we want to be more mindful when we see deficits show up in our forecasting and things. The other one is indifference. We don't run across that too much, but sometimes, okay, whatever, you show it to them that you don't get any response from the client of, okay, what are you planning to do about it? It's within the 8-week window. What's next? What are you going to do? But usually it pretends more on maybe use the term freak out side of things, like week 12 when there's a $7,000 deficit when their weekly average is maybe 50, 60,000. They're like panicking and they're wondering what's going to happen. That's just there to guide. And especially if you have profit first, many times we're anticipating there's going to be week to week deficits, and not consecutively, but there's going to be times where there's going to be a deficit where you're spending more cash than you're receiving. That's okay. It's where we see those consecutively over several months or several weeks that we need to make adjustments. And then if it's a large amount and it's within the 8-week window, then we need to make some choices or help the business owner make some choices around that. So that's our usual method.
Jason, do you guys use, I don't know if this is industry, or do you guys use a specific tool for this, or if it's something that we can tell people about for the 13-week?
Yeah, so guidelines, I would say it's, okay, here's a couple of ones that we would work for. When we don't have a lot of information available to us, like the bookkeeping is not in good enough shape or something, then the we'll use some things like rolling averages. And so like we can get a good enough picture that we can see the where things are being spent rough percentage wise and things so that it can flow through representatively. Again, we're not trying to recreate precisely what's happening on the piano. We're just trying to get some picture of things. And so we'll use things. And it's been a pretty good guide of using rolling averages, 6 months, 12 months, depending on what the cycle, cash cycle is. Has been a very good help when we're not able to forecast. So e-commerce, this comes up a lot because it's consumer facing and we're not going to be exact of when people are going to make purchases and things, but we have some historical averages we can work from. And in many cases, they're going to be good guides. And then we have the business owner think about, hey, are you changing your ad spend? Are you doing some other things? Are you running some specials? And try to build in some of those percentage buffers depending on what their activities are going to be around that. So that would be something that I could, as far as guidelines, I can bring to bear. And then as if it's in a niche or an industry that we have a lot of experience in, then we can apply those experiences into, if we don't have solid bookkeeping in place just yet. Obviously, we're working towards that, but we're in early months of an engagement. If it's a more complex business, that's been tactics, tools we've been used to make it effective.
Awesome.
Yeah, I would just go back to the comment that people think it's just their P&L. The cash flow projection, forecasting, that is a dynamic document. If you do it in Excel or something like that. Now, there are accounting programs will also do a cash flow like that for you. But yeah, when you're building something like that, maybe in Excel, that is actually a good case for Excel, I think. Just keep in mind it's dynamic, it's changing, you're adding to it, you're putting in income fluctuations, you're forecasting the balance sheet, your note payments and all that. So that's why that's why that all goes on there.
Yeah, and it's intended to be a guide. You're not recreating, it's not a historical document. It's a living, a breathing document. And I would suggest also getting a process around updating it on a weekly basis as well. It doesn't do much good at all if you're only updating it every 3 or 4 weeks. It's just not going to help survey it because most business, again, from my observation experience, is a week to week and month to month process. And my observation is those that are engaged on a weekly basis with their business finances tend to have better outcomes and also decision making because they're getting, and I use the term pulse of what's happening on a week to week basis with the business. And a 13-week forecast is a great way for the business owner or client to get engaged with that and build that into their activities on a regular basis.
Yeah, we actually do some of those for some clients. We've just been involved with them long enough to know how their business is. And so we actually do the cash forecast for them and then send it to them weekly for review and just point out with a little overview any issues we see coming up or questions we have and that kind of thing. So I will use that tool for my business as well. Just to see, especially I've got a seasonal business. I don't want to run out of money in July.
Yeah, definitely not. Who wants to run out of money at all? But some visibility of what you need to shift or make other decisions or accelerate things, pay things off, etc. In some of the work I do, which is, I guess, more clients that are in distress or turnaround situation, however you want to term it, is that's one of the things we focus on is the cash conversion cycle of shortening those days, that gap between when you spend money versus when you receive it. Primarily going to be a product business metric, but it's a important one. If you can reduce the amount of days between when you spend money versus when you receive it, assuming that it's profitable, then we can close that gap and make a difference. Is what kills businesses isn't usually profitability, it's cash availability.
It's cash flow. Yeah, that's the number one reason businesses fail.
Yep,
Lack of cash.
And I think of profit first as the method of management, just like the operations of your cash, or in accounting terminology, treasury management might be the term your accountant may use with you, but that's the method. The forecasting is looking forward. It doesn't replace profit first. It can help if you don't have visibility or you have a smaller business that isn't really going to be relevant for a 13-week cash forecast. It can substitute for that. But larger, more complex businesses, and then if you have investors or other traditional finance reporting needs that you need to do, this is going to be a way for them to have a better understanding of the forecasting. Because in my experience, budgeting is a good exercise, but it's not a replacement for forecasting.
Absolutely.
Oh yeah, for sure. And just to be mindful, I think a lot of people get confused. They look at the book and it says profit first is the title of the book. And they think, oh, it's an accounting system. It's not. It is a cash flow system that is very easy to implement and you can use in tandem in helping you forecast how much operating funds you're going to have.
That's it. But it's a tool to be used in bookkeeping. Bookkeeping as a foundation.
That's right, Masheka. Yeah.
No, I have to always go back because a lot of people say, I want to do profit first. And if you don't understand your numbers and what's coming in, what's going out, it's almost impossible to do it. And at least do it accurately where it can really serve you.
A lot of people think that they're doing their bookkeeping just for me, so I can do a tax return. That's not at all.
No.
It's almost pretty much every conversation we have on this podcast is going to be with the blanket statement. The bookkeeping needs to be there because we can't do much. And there are some things we can do as an intermediary gap filler, if you will, especially in onboarding situations where we haven't been involved in the bookkeeping or financial processes or implementing profit first. There are some gap fillers, but they're not intended to be a long-term solution. Bookkeeping, good sound bookkeeping processes and application is going to be foundational to everything that we're going to be doing, all of our different businesses, whether it's profit first, taxes, forecasting, business advising. Nothing happens without having the bookkeeping in place.
Yep. Absolutely. Nothing happens without having the books in order.
Masheka, did you say they need bookkeeping?
I know. I feel like I talk about that so much, and I know people get tired of hearing me talk about it.
Sometimes you just have to beat a drum.
I know it, but I think it's just the way that it's been presented too. And I'm not to throw anybody under the bus, but it's just presented. It's just this easy peasy thing you do, and it's just not. I think some of these providers have done a disservice by making people think you connect your accounts and just you're done. And that's just not it.
That's a topic for another day.
Oh, yes. I know it. I don't even want to go down. I don't even want to open that can.
That sounds like a good episode. What are sound bookkeeping principles? Yeah.
Let's just roast into it.
Yeah. That's it.
Okay. Sorry.
I know it.
Well, anything else on the forecasting side that we want to cover?
No, I feel pretty good about this topic.
Let's reach out to your profit first professional, one of us. It tends to be, at least my experience, a regarded topic when I've done other podcasts and webinars and get a lot of feedback around that. And if this is generating any questions for you, feel free to reach out to us or one of your profit first professionals that you may already know for some guidance on how to set that up for your business. But until next time, thanks for joining us, and we'll see you next week on our next episode.
Alrighty.
This content is for general informational purposes only and is based on current law and guidance as of the date of recording. Tax law and regulations are subject to change. This discussion should not be considered tax, legal, or investment advice. Listeners should consult their own tax or financial professional regarding their specific situation.